In this video, learn how to make trades that fit your unique talents so you actually profit.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how an advanced fundamentals trader creates an anti-playbook trade, the 5-run home run. Hint, you can't hit a 5-run home run, to help eliminate his bad trading and bad trades that are holding him back from being the trader he can become. Let's get to work.
Kicking off, following up on the anti-playbook, which is trades or trading strategies that I'm trying to eliminate. This one I call the 5-run home run, and it's really less the mechanics of a trade that I got wrong than something that I noticed in my monthly review. There were several examples of it over the month, but this is a particularly egregious example of something that I seem to be repeating way too often. And what it really is my trying to take too much out of a trade and having unrealistic expectations, hence the name, the 5-run home run. I think everyone knows you can't get a 5-run home run. The mantra in baseball is, just put the bat on the ball, get on base, and take what's available to you. This shows up in the area of trading psychology and is something that really is impacting the tactics and what I really think I need to be focusing on right now, and thought this was a really good example to walk through. I do see 2 potential steps to address this issue, and I'll go into it at the end of the presentation. But let me walk you through the trade to begin with. The background is during the monthly review, I found that this was, as I mentioned, a phenomenon that's going on. There's too many charts that look like this. This at the high of the day at around noon, that was one full day's risk that I was in the green from this specific trade. That I think is to have that on there, to not only let it all go away, but turn into almost the equivalent magnitude in the opposite direction, is just obviously unacceptable. I do believe that this is a function of trading psychology, and that's something that we continually talk about as being the key differentiating factor between a successful and unsuccessful trader, and something I'm very hell-bent on managing and getting correct. As I talked about with Dr. S at one point, I really need to manage my expectations on a different time frame that I'm used to historically. And the factors that I think contributed to why I've had this change recently is sizing up, feeling some pressure and wanting to produce P&L, and on a technical level, not having an adequate sell or profit-taking methodology in place. And it all contributed to this run right here. It makes me a little sick, quite frankly. The big picture, we'll walk through the mechanics of the trade. This is a chart of Tesla. I think everyone knows what's happened in the market. We had the COVID crash, then a fairly amazing rally. The stock that we're talking about is VTIQ, and it's a development stage electric vehicle company that rallied from about 10 to 30 as of the time of this trade. As you can see, Tesla has been running for some time. I think a lot of people know, and this seems to be an extension of the interest in zero emission vehicles. The company is very early stage. It was a blank check company formed to acquire Nikola, I think I'm saying that right, a development stage electric vehicle heavy truck company. There are a list of heavy hitters involved in the company and a lot of optimism, but it's incredibly early stage. To try and value this is an exercise in futility. There's billions in CapEx required, cost unknown, growth rates are guesses, but they do like to highlight that the total addressable market size could be as large as 600 billion. And that's basically why people are buying this company. The fundamentals, as I just mentioned, blank check company. At the time of the trade was VTIQ. It's now trading at NKLA. And for anyone who doesn't know, it's up another, 50% today. Got as high as 62 the last time I checked. And this is compared to when I was shorting this in the mid-20s only a couple of weeks ago. The specific fundamentals, the ATR at the time was 3.2, average daily volume 3.8 million. Our volume on the day was 4.5. It was very active, and I thought it had put in the backside. Short institutional ownership I have not available. I don't know what it was at the time. It was very early stage, so there just is no information. Again, the only accomplishments of the target company that they're acquiring is they've raised $500 million and been spending it. They have zero sales. They don't even have firm contracts, but they have quote unquote reservations for delivery starting in 2022, which is quite frankly optimistic, that suggests $10 billion in total revenues, not in 2022, just that's the total backlog.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This is something I pulled from the slide deck when I was looking through it, and there's a little bit of information here into the valuation of the company, but it's just very simply what I'm saying is, if you can see over here at the share price of $10, which is the acquisition, just what they expected when they did the acquisition, it suggested an enterprise value of $3.3 billion. Again, the only real accomplishments to date are they've raised $500 million. So they're giving themselves a 6-fold markup for completing a transaction of a company that doesn't exist. These are all things that led me to believe that this was a short, and yes, there's a lot of optimism about electric vehicles, but it really feels like it's ahead of itself. Longer term chart, as you can see, it hung out right around $10 for quite some time, a little bit above it, and then starting in early May, just absolutely took off. There was some press. I saw an article in Forbes and a bunch of people talking about it. But again, no real fundamental accomplishments. Got as high as mid-30s. And then the day that we were involving this chart leads up to the day before that I was getting involved. And we will step forward to the short-term chart. You can see right here overnight, this is where we are. And it had broken below a trading range and a spike low and was consolidating and pushing lower. So trade management, the day of the trade, we can see a pretty noticeable gap down. I had gotten involved pre-market and had some size on them and got a pretty nice profit coming out of the gate. Took the opening drive lower and then covered the whole position as we started to rally higher. Pushed back, test the previous day's high, which arguably could have been a nice entry, but I was just not paying attention to the trade right then, and then came back down. My plan was to get involved once we broke the previous low and look for a move something along these lines. I had one false start here. I was a little bit early, got a push down, and I got stopped out right above, per my plan, a nice consolidation there. Then this is where I started to get a little bit aggressive, and I think my psychology went a little sideways. I was anticipating a move down as it tested higher, then immediately pushed right back lower. Stuck it out. Shorted again when it just wicked above there. And this right here is
Trey, let's take a step back.
Absolutely.
So when you're taking this trade right here, what are you hoping to get out of it? Are you scalping it? Are you momentum trading it? Are you swing trading it for a move down to a target price?
So more of a swing trade. I definitely tend to be longer term. I'd call it a trade to hold and get a substantive move down for something that had gone from 10 to 36 back into the low 20s. I was looking for, and there's some technical support right around 20. I was looking for a break into the high teens.
Okay, so then we got to talk about entry.
Yes.
For that type of trade, I'm not a big fan of the waiting for it to get below the low in this particular idea. A bunch of reasons. I think you're gonna need to look for a rolling over pattern below VWAP.
Okay.
To get into a swing trade for this, or shorting that actually into the close from the previous day.
Yes.
That's a little bit of a trickier thing. But the point is that if you're looking for a swing trade to the low, you got to start at a better price because you have to give yourself enough room for your stop for it to make sense and for it to work. Shorting that stock below the low for a swing trade, I don't like that unless there's been a lot of time that's gone by, unless it's taken many times and there's been many failures for it to get below a particular low, and that low then becomes support, and then we finally get below that support level, finally get below that low. Because when you're looking at the stock, you've said this has been a runner. You've said this doesn't make any sense. You've said this is a potential growth stock and a growth industry, although you debate that, but people are looking at it as potential growth stock. You've got to be cognizant of spikes, enthusiastic buyers, people buying pull-ins, shorts that have to get out of positions. And it's day one, right? For the most part, in terms of pulling in, showing some weakness.
Not really. It's day 3 from where we had a real spike low, or excuse me, spike high. So let me go back here.
Well, what I mean by that is it's the first day it's showing some weakness.
Yes. So it peaked out and then it consolidated and then it really pushed lower.
I'm sorry, I should have used better language. So
yes.
Yeah, so it's firstly showing weakness. So your entry price is going to have to be pretty good, and that hitting the low is for momentum trading or scalping.
So, and you're making a good point that I need to get clear on myself is, my mindset was that this is a swing trade. And I started with it as soon as it opened, it got going. But I know and had the mindset that this is a momentum lot when I'm hitting the new low on the day. And this is kind of exactly what my problem is having swing trade expectations for a momentum strategy. And I need to be clearer in my own mind exactly how to manage distinct trades. Those are not the same thing. And when I get it and it's running, I'm like, okay, great. I should be much more aggressive in taking that momentum lot off and letting that core swing trade work. And that's something that I conflate too frequently.
Yeah, so the 3 ways to get into those, totally agree. The 3 ways to get into those swing trades would have been short into yesterday's close, rollover pattern near VWAP that you can trade against, new low only if that new low had been significant support and time had gone by.
Yep.
So that's how you want to be thinking about that, or else the swing trades aren't going to work because you can just look at the chart and see you need to give it a point, and the point doesn't even mean anything, even in a $20-something stock.
Right.
And you gotta know that going into that. So those are 3 patterns to be thinking about. The most common one is the rollover pattern below VWAP.
Yes.
And so as we'll talk some more about that as time goes by, but go ahead. I didn't mean to jump in there.
So no, you're actually a great straight man. This is going to be not the slide coming up. The following slide is how to do it correctly. And I'd like to hear, I think I have some of those elements incorporated, but not all of them. So following up on that, you can see what happened. And this really speaks to my psychology. I'd had a really good trade. Again, this trade alone would have been a good day for me. And then I was fine covering it here, but my expectations were we're going to go back lower right before 1. And I added size down over 2 ATRs. And as soon as we started to work higher, I started to fight it. And this is how I gave my entire day away, right here. Just boom, boom, boom. And I had this area covered. It's like, okay, as soon as we get above there, I'm stopping out. Oh, 2 minutes later, we're going back down. I was right. Get back in, stop myself out. And then this is just garbage. This is just exactly what I should not be doing. I point to a couple of things, how to fix this. Step 1, and I'm talking about trade psychology, but one of the things that I believe is that trade psychology only comes in where a process doesn't have very hard and fast rules dictating the decisions. And I have too much latitude in my process at this point, which allows my psychology to get involved. So that's exactly what I'm working very hard on right now is just tightening up the process at the corners, eliminating subjective areas and saying, no, this is the rule. If I'm taking a breakout and it comes back in by even a little bit, it's a momentum lot and it shouldn't come back in, as example. Adding when a stock is trending against me, again, I'll go into that in the next slide. And then having a automatic objective sell discipline that I don't violate. That will reduce the impact and the subjective ability that I have, and I'm getting some things wrong with trading psychology. The biggest issue I have right now is I'm trading my P&L. I look at it and I say, I can be making dollars, and quite frankly, seeing what happened in March and the P&L that was put up did impact my thought process too much. That's just not how I should be thinking about things. It's not March. I have to take what's in front of me. Again, the 5-run home run example. I can't hit a grand slam if there's nobody on base. Just have to take the trade that I'm taking. It's also the fact that I'm increasing size and started thinking about dollars over proper execution. So the real steps I need to take is just, am I trading correctly? It's pretty simple to answer that question, and think in terms of R. If my risk is X and I'm generating, or R, and I'm generating 2 or 3 R, that's a good trade, period. I don't care if it's $3 or $300 or $3,000. If I'm generating multiples of R, then I'm executing correctly. So stepping ahead to the next, how I should trade this, almost exactly to your example.
Jay, can I just jump in right here?
Yes.
Love your emphasis on R. Great things for developing and new traders to be thinking about, for the interns to be thinking about, for the new traders to be thinking about, for the developing traders to be thinking about. Look, I mean, the reality is that we're very fortunate at the firm. Respectfully, you're all very fortunate to be able to trade at a firm, because it relates to your last point, which is, if you can produce R, if you can produce multiples of R, the capital's there for you. The risk manager is there for you to come to you and ask how much more risk you want, and do it responsibly. The partners are going to support you. The partners are going to encourage you to take on more risk when you have proven that you can produce multiples of R. The technology is there for you to be able to execute like you need to be able to execute when you're trading bigger. There are people around you who obviously are trading with a lot of size and a lot of risk, who you can emulate, talk to, show you that you can do it. I mean, when we used to actually be in the office, now we're all remote, but maybe we'll get back to the office soon. You know, when we used to be in the office, you walk the halls with people who are making a lot of money. And when they started, they were focused on exactly what you were talking about, exactly what you're talking about, exactly what you're talking about. And then just R becomes a bigger number, right?
Yes.
So the risk becomes a bigger number, but they're still essentially making multiples of R. So, all right, at the beginning, the R used to be thousands, and now it's tens, you know, that's tens of thousands, and that it's hundreds of thousands, but it's still the same game. So love the way that you are focusing on R, 100%. And if you just can do that, if you can produce multiples of R, you're in a great place for everything else to be taken care of. That's not true of a lot of people. Like, you have all the capital you need, you have all the products you need, you have all the support you need, which should bring peace of mind. Just focus on that. All right.
Exactly. It's exactly how I try to think about things every morning. Speaking to your comments from a couple of moments ago, this is how I think I should execute the stock. This is 100% full benefit of hindsight, exactly what you're talking about. I looked at it. The first 2 arrows are the trades I actually did. This is, you know, it broke down below a small consolidation pre-market. That's where I got involved. That green dotted line was what the stop that I gave myself, which was never tested. And then, excuse me, the second yellow arrow is where I took profits after an opening drive lower. So those are the 2 trades that I did, and that's good. Okay, ignore or avoid a spike higher. And then exactly what you're talking about, this I viewed as a rollover pattern below VWAP. Push down, tested it, a spike lower, come back, a spike up into VWAP, and then it's rolling over. I should be getting involved right after that spike into VWAP and a failure. My risk is very small. I've got a lot of reasons I'm bearish on the stock and think this is absolutely a possibility. The risk reward, the profile that we're talking about right there, that's a great trade. So looking at it, how I think I should do it is, you know, have 1 or 2 lots on here. This is a strong push down, and you can see there's a volume spike here and a pretty distinct candle there. That looks to me like that I should be taking some off. Take a half off there. Yes.
Hey, Trey, that's your trade.
That's my trade.
That's your trade. That's your trade. That's your trade. That's your home run. I don't know how many people are on base. If I tell my son you can't hit a 5-run home run, he's going to be a little upset. But that's your trade. That's your trade. That's your trade. And what you're doing right there is, and people watching will see how much better and how much advanced you are in looking at fundamentals than other traders who come before you. You have an advanced knowledge of fundamentals and how they may affect price action. Now we've got to find, that can be good and that can be bad, as we've talked about many times.
Correct.
Because sometimes you're too smart for the rest of the market, and sometimes it takes the market longer than you'd hoped to catch up to what you've discovered. And we saw that you had a great fundamental thesis in, was it BBY?
Yes. BBBY, triple BY.
Triple BY. You had a great thesis on that, and it took a little bit longer for it to play out, but you were exactly right. And so we gotta take that advanced knowledge and we gotta match it with a pattern that works for the type of trading that we do. And that pattern's gotta match your particular strengths. Traders tend to be good in two different types of ways. One, they're really fast thinkers and they can really trade the price action. Okay, so even in your class, you can see like the Maxes and the Davids. I don't want to leave anyone out. The Swangs. There are people that process information quickly. Swang's not in your class, but there are different types of traders who do different types of things well. The price action traders are very fast thinkers. They process information very, very quickly. And my partner, Steve Spencer, is like that. He can give you an answer before you can even spit it out of your mouth. Very, very fast thinker. You want to find the types of setups to match that type of thinking. So somebody like a Swang, some of the fast thinkers would be more interested in the new low,
right?
In the momentum trade, in the scalp. Somebody like yourself is going to be less interested in that and may shun that, may decide to eliminate that, may decide after measuring trading stats that you just don't do well at those types of trades. And that could make a lot of sense given you're interested in fundamentals. So that trade right there, that rollover pattern below VWAP is showing you the weakness, is showing you the pattern. It's a little bit of a slower developing pattern, and that's fine. There are people that do very well who are deep thinkers as traders that need things to set up. You can be a terrific trader by not being a very, very fast thinker, by being more of a deep thinker. So your deep thinking is diving into the fundamentals better than others, looking for the setup to actually come to you and be a little bit more patient. It'll take a little bit more time, and then put the trade on. And you'll be in probably trades that are a little bit longer, hold it a little bit longer. They'll take a little longer for them to set up. But you're matching your playbook now with what you do well, how you think well. And that's when people really start to become powerful as traders.
Correct.
So
and you're speaking exactly
yep.
to the I don't want to say mental struggle that I'm having, but the evolution I'm having of trying to match my skill set up with a different time frame that I've operated on historically. I am trying to develop some scalps to generate enough cash flow to keep me occupied while I wait for something to set up. It's, an incremental tool in the toolbox is how I think about it. But I completely agree with you that this is okay. I can have and that my fundamental analysis can get in the way. I can give you every reason why this stock should be 12. And I need a mechanism that prevents me or puts guardrails around me so that I'm not sitting there waiting when the stock bounces off of 20 and starts working higher.
And Trey, let me jump in.
Yeah.
It probably will be.
Yes.
At one point 12. But we don't know if it's going to be 80 or 100 or 120 or 150 before.
Correct.
And as traders, yes, we put on risk, but we put on risk responsibly. And we're not going to draw down $1 million to make 50,000.
Correct.
We're going to draw down a little to make a lot.
This is the last point I'll highlight on here, which I'm trying to really incorporate and depend on a lot more. And these are some very basic moving averages that I use that are fairly reliable. This is a 50 and the faster one is a 21. But right here, I can capture all this move down, take some off again into a high volume push down. This is just a classic, selling exhaustion signal that I'm very mindful of and able to take advantage of. But then here, this is the guardrail I'm talking about. My moving average is turned higher. I get a back test and then we're moving higher. That's full stop. That's it. Done for the day. There's no reason to be doing anything in here despite my expectations, 10 bucks, 12 bucks. I don't care. The stock is moving higher. It's objective. There's nothing to dispute. And as I incorporate this, that's something that I'm trying to rely upon in my time frame. I don't care. Stock's going higher. I can re-enter it here and get the full benefit of the move down. I'm trying to incorporate those kind of tools to prevent exactly what you're talking about. You know, it'll go to 12, but it sees 100 first, or at least 62 as of an hour ago. And there's something that will keep me out of the way on the way to 62, and I can get involved in a much higher price.
I love that. I have to say, I don't know if this really is an issue of trading psychology for you, as opposed to trading the right types of setups for you and looking for the right types of setups to match a fundamental thesis with a short-term trade. If you are making momentum trades poorly and losing money, and that's not what you do really well, you should be frustrated. That's called being human. If you weren't frustrated, I'd worry about you then. But I think if you think about this, go back and ask yourself, if I had taken the trades that really are best for the way that I think, my special talents, and they hadn't worked out, if I had taken that rollover below VWAP trade and I had set a stop that made sense, I put that trade on and it didn't work out and I moved on to another trade, would I really be that frustrated? So that's a good question to ask yourself.
Okay.
And if you keep making trades like that, you understand that there are going to be some trades where you lose money. We tend to get really frustrated when we're doing things we shouldn't be doing. We intuitively sense this is just not the type of trading that I ought to be doing. These are not the types of losses that I ought to be taking. And it gets you a little bit more aggravated. But it's a result of a lack of trading edge.
Mm-hmm.
It's a lack of trading edge. And I bring this up because I think Anthony, we were talking about this with last week. I bring this up because it's important to study the things that you really need to study that will make you better. And if you think there's something wrong with you, if you think needs to be a study of trading psychology, and really the issue is a trading edge issue, which feels to me like that is the issue. And we'll have plenty of other discussions and figure that stuff out. But you think it's you and your trading psychology, you may do some things in your review that aren't going to get you to the result you need to get to quick enough. You need to be looking at the patterns where you can put on your trades that match your fundamental thesis and studying them. Because obviously the rollover patterns below VWAP, there's going to be better of them than others, where you're going to want to put on even more risk than others. And so the study of those trades and the specific edge are going to be super important. Appreciate. Yes. Anything else we want to throw in here?
Nope, that's really it. That's
good.
Yes.
Yeah. And let's keep building from your strengths. Great job breaking down this trade. Great job teeing up the fundamental potential trade. Obviously it's a lot higher, so you'll be able to make even more money when you capture the backside.
Right.
So we'll have you back and you can explain the great trade you made there. But you should start game planning that. Like,
yes,
up higher. That's better for you.
Absolutely.
Game plan the really big trade. Okay, appreciate it, Trey. We'll talk to you guys soon.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.